Let's talk about what just happened. Got my red light on over here, which you can see it shining on me for this reason. This was unexpected. Before I do so, come over to ztrades.net, check out the terms and conditions page, read our disclaimer, agree to it. If you do not watch the video or join the Discord. If you do agree to it, join right here. It's completely free. And watch this video. I want to talk about a lot of things here. And before I do so, also check out our newsletter. So we have a newsletter as well as free SMS. So let's go ahead and get to it. Let me jump into the market here. Start off with SPY. Okay. We have the election gap. You guys remember the day before elections, it went nuts due to why? Well, number one, the election's over. Number two, it sees rates going lower. Trump wants to take rates very low and control it because the Fed, it's not working. It isn't working. It's definitely halted runaway inflation. The Fed did do that, but getting it actually under control, it's not. The government has to step in. The government as well as the Fed have to work together. The government can't just cause inflation with the Fed behind them trying to sweep up the mess and not doing a good job, right? So, it's like when Volcker and Reagan were working together. They got it under control, but that was a different story. That was also a different monetary system in a sense. It was fresh. The orange had a lot of juice to squeeze out of it. Now this thing's over squeezed. There's not much left in it. We have the election gap here. By the way, before I move on, they can get energy down. They can cut government spending, right? They can start bringing jobs over. That's not going to affect anything. But cutting government spending as well as a really good energy policy, really good energy, getting energy very inexpensive will be a sword in the stomach. I don't know what word I'm trying to look for. I can't remember it. It'll be a knife to the heart in inflation, and you know who can do it. That's one of the reasons why we rallied so hard on top of deregulation coming, which could really make things fly. Well, keep in mind, if there's anything unexpected at all, let me go ahead and I'm gonna move this up over here. Sorry. Let's get this back up. If there's anything unexpected at all, the market will overreact. Who remembers 2018? You guys remember 2018? Or, I'm sorry, we're going to get to 2018. Who remembers December 2023? I remember it like it was 2 seconds ago. Well, this they said that they were going to do 5 cuts in 2023, which almost happened. I think they did 4 later. I think we're 4 deep now. August, September. Yeah, bro, I think we're 4 deep, so they didn't quite get to 5. But the market really, really rallied. They said that they were going to do it right off the bat in 2023, which didn't happen. So the market rallied in anticipation the whole year. Well, now they're saying, so we're expecting QE for next year, because the December is a very important Fed meeting. Very important. One of the most important ones, in my opinion. The first as well as the last. Those are the important ones. Well, they're now saying they may only do 1 hike cut next year. 1. That's unexpected. And the market collapsed. That's one of the biggest drops I've seen. Right? We went from 606 to 585. I mean, that's like a $20 drop. I haven't seen that since COVID. That is ridiculous. Now we have this election gap. I have it right here. I've had this written out here. We also have a volume shelf here. We have the 100 EMA right here. Right? Is this the 100? Yep. 100 EMA right around this fill here. Keep in mind, what do we also have on Friday? We could get a relief, sure. We could get a relief bounce tomorrow and Thursday, maybe. We have quad witching So if we come back up, we would then peel over and then be maybe here. But then we're in the middle of the gap. No, that's not what I wanted. That is not what I wanted. We would then be here, right? Let's go ahead and change the color on this. We would then be there. 583. That's not too far off from where it is. Or it could just plummet all the way into here. But keep in mind there's also a trend line coming from there. Let's see. There all the way up, as well as here all the way up. Yeah, let's see if I can draw this out. Maybe I should just hit the trend lines. I'll just do that. We'll hit that button. I know this looks kind of wild, but we have one right here. Follow this one down, okay? See where we're at? I mean, it's starting here, held here and here, and respected it there. So this is a heavy area, right around 583. If that snaps, which it could with quadruple witching, then we could plummet all the way down here. In my opinion, that would be the bottom, and I do not see us ever going below 563. I just don't anytime soon. Powell's going to be in till, you guys got to keep in mind, you know, this is what I wrote. I wrote this. This is going to go out in the newsletter. You know, I've been following the beef with Powell, and in fact, let's also pull up the Fed rate. I should have had that over here, but let's go ahead and pull this up. All right, we're going to pull this up now. Let this load. Powell and Trump have beef. The Fed is late to react. They should have started rate hikes in 2021, even if it was a quarter point. If it wasn't working, take it up to a half. If that wasn't working, you know, remain at a half each time. Maybe take it up to a full point, right? And we could have already been coming out of this, but that's not what happened. Let's go ahead and pull this up. Let's take a look at this. Let's talk about some stuff here. Gosh, that's when they got inflation under control over there. And then the market just never looked back ever since then. And another video I did, every time we've done quantitative tightening and we went into quantitative easing, the market, this is not the market, this is the Fed rate. What happened in 2000 and 2001 aside from the Twin Towers? A market collapse. Quantitative tightening, then, quantitative easing. What happened? 2008 financial crisis. Collapse, market collapse, as well as the Fed rate. Now take a look at this. The Fed rate pretty much was at, the whole time Obama was in, it was at nothing. Look where it's at. Right before Trump got in, it started to tick up a little bit. And you know, they weren't doing this for elections, for election reasons. They weren't. It took a lot to get out of the woods. This was not just political. But here's why he was upset. Do you guys remember his comments? Where are my veteran traders at? The whole time he was in, he's like, what? Obama got this the whole time? Then I get in, kapow! It ticks up all the way to 2 point. Let's move my face out of the way over here. Well, in 2018, Powell came out and said, we're going to hike interest rates for 4 consecutive quarters and see where we're at then. Market fell like it was in COVID. The winter, December, it was a nasty December. I mean, nasty, if you guys remember. Who remembers December 2018? Let me know in the comments. Who's a veteran trader here, even though that's not that long ago. It doesn't really classify you as a veteran. The market was falling, and it did not stop. He came out on his Twitter, and he said Powell should be fired. And he literally said, Trump literally said, buy the dip. Well, Powell immediately started cutting interest rates right after that. And they were flat. They weren't doing much. Then COVID happened. So that was separate. This giant drop was separate from that issue. Right, this was so we could recover from '08 because it was bad. Bush didn't do anything. They were just like, well, let's let it do whatever. Right? Right as Obama came in, he did a stimulus and left rates there. They started to take rates up because they had been low for all that time. They can't just stay that low forever. And things were doing very well. And as we were going up, the economy was doing well. Well, Trump came out and flipped out on Powell. right? We're going to get into other TA on other stocks, but I wanted to explain this. People asked me to explain it. I'm going to explain it. Here's what I said, right? And also, by the way, remember I showed you where we did over this way, QT, then QE, and then we dropped every time, QT, now QE. I wrote an article about this, and I did a video saying that there'd be a gigantic collapse in 2025, right? Something was going to trigger it off. It's like they kind of just did it now. That's what I'm really scared of. I am very scared that that's going to happen. Here's what I wrote in the newsletter that's going out, and the email everybody's going to get. If you guys subscribe, go to the Discord. You can see it in there in the announcements channel if you want to sign up. Email as well as SMS. You'll get a link in the SMS text to the email where you can view it. Thoughts? Question mark. I said thoughts. I find it funny that the Fed made remarks. Now this could be a little bit tinfoil here. Probably wrong. I don't know. I find it funny the Fed made remarks that the rate cuts that were aggressive this summer and fall were not for, quotation marks, not for political reasons. I think they wanted things performing well for elections. Every president does. Doesn't matter which side they are, they do. But Powell also doesn't like Trump. For elections. Powell and Trump do not get along. They have beef going back to 2018. Yeah, over this right here. This is where the beef came from. Trump was okay with this, right? When they really started to tick it up, that's what pissed him off. Trump also made remarks. Trump and Powell have beef going back to 2018 if you all were in the market then. Trump also made remarks that Powell should be replaced. I should have that YouTube video. They brought it up. They brought that up. They made a comment about it basically last Fed meeting. And Powell looked mad. He looked up and he was frozen. He looked like he was almost shaking. And they said, is it legal? Because Trump basically said he wanted him out. He wanted to get him out. And Powell said, no, it isn't legal. And they said, are you going to leave? And he said, no. Powell's going to be in until 2026. If he's in that whole time, because I don't think he's going to resign. I think he's going to get 2% inflation, but in a way that, let's actually pull up the inflation rate in the bad way. I mean, the Fed can only do so much. They can't control the energy policy. He's doing his job, right? Let me go ahead and finish this out before I show you guys the inflation rate in 08. Because I'm kind of all over the place. I'm sorry. Looked like he was shaking. And he said he would not be stepping down. Now they may only do one hike in 2025. That was unexpected, which is why we dropped. Well, this would be Powell's last term. And he would achieve the 2% inflation if this did trigger dot-com or 08 gigantic crash, which I don't think that's going to happen. Maybe not. But in the sense that everything would start breaking down and snapping and collapsing certain sectors. Commercial real estate is already pretty much there. It hasn't bled over into residential yet, but it is. With mortgage rates being taken up now, with the 10-year exploding, it's going to trickle over there. I am for and against, which I am. I'm for and against what they did today. It's painful, but possibly needs to happen. We did want things lower. Remember, it is possible to get inflation under control without the Fed. You don't need the Fed to really, really get inflation under control. If rates were negative and they're injecting liquidity everywhere, yeah, you would need a Fed to stop that, but that's not the case. We can do that through good policy, cheap energy, and cutting government spending. They try to act like it's companies that are doing it. No. Yeah, they are price gouging, but they have the ability to do that with the inflation that the government caused. We're not immune from inflation with COVID. Of course, we were going to have to send stimulus up, but it was overkill. Let's see how this unfolds. My fears are that this would be the dreaded crash I've been talking about. Not now, but we could tick up and it could lead into that. I've been talking about all year. The crash that happens when we exit quantitative tightening QT and head into QE, dot-com and 08, quantitative easing Fed rate. Everyone's talking about the housing market going to boom when they cut rates. What? Hey, guess what? Rates were high in 2007 and they made them plummet to almost zero. And this was and they remained down here and the housing market kept dropping all the way till 2012. I don't think you guys understand this stuff. Buying's going to halt if and when they cut rates aggressively. it's going to send a surge of sellers on the market because I'm a buyer. I want to buy. I'm not locking into a 7% rate. Get out of here. If they get rates down to 4, I'll sell my place. Well, that's not good. Now everyone's going to be selling their place because they want to buy, right? It's not first-time home buyers that are the number one buyer, right? It's people who already own homes create the most volume because they move constantly. They've got money from the house they're in. They sell it, another one, sell it, another one. And people like me will be listing our houses for sale, which means I have a lot of competition because everyone else is going to be listing their house for sale and everything was going to drop. Let's get into getting off topic here. I wanted to give you guys everything in my thoughts here on what was going on. And I think that, let me go ahead and do that. Inflation rate chart. I can't remember it, and I do not have a lot of time to find it right now. Monetary Fund, Federal Reserve Bank of St. Louis. Here it is. Tell me this is it, because I don't want to hold you guys up. We've got a couple equities to cover here. If this thing would load. That is not it. Let's go ahead and let's see. Max. Okay, there. This will do it. This will do it. Perfect. We can look at this one, and we will look at, here, let's pull it up. Let's pull this up. Consumer Price Index 2005. Now we'll pull this one up. We'll take a look at this one. We'll take a look at both of them. Screw it. Let's get both of them on here. Okay. 1930. Inflation rate was -10. Right? 2008, inflation rate was -2. Let's take a look at this. All right. 1980, inflation was ticking up. Horrible policy. A lot of other stuff too. They printed a lot of stuff was dumped on Carter, but he also did a horrible job at managing the economy and country. Inflation ticked up, and the money printing came to bite them in the butt. Let's take a look at this. Let's go over here. All right, let's take a look at this. What happened in 2009? Inflation came in negative. I can't point with my finger, but look where it says that little box that's popping up. We're at -9.5. Right? Did that get inflation under control? Did a collapse do it? Yeah, because unemployment's up. People don't have money to buy things. Yes. We need it. And then in May, of course. But, right before that, 1.6? While rates were low, I mean, that's not bad. That is not bad. Not bad at all. Stayed flat the whole time. Not bad. So, and then there's COVID. The after effects of COVID and extreme money printing. Look at the little head and shoulders up there with a drop on inflation when they started to hike interest rates in 2022. Let's jump over to the market. So that's everything, in my opinion, there on what's going on. And if it did trigger a crash, well, would Powell have gotten to the 2%? Was it a soft landing? No. But did he achieve 2%? If this happens, yeah. And then that would be him exiting. My goal is to achieve 2%, and that's what we did. Right? Let's go ahead and move on here. Let's get back into the market. We're going to cover crypto as well. This video is running late. Let's cover AMD. All right? I've been watching this. God, guys. I started cutting stuff. I cut my swings just immediately. AA, Cola, Square, out, McDonald's, out. It's unexpected. Wasn't due to user error. It was simply due to, man, you just can't control that stuff. There's nothing you can do. Stuff like this is going to happen. It's going to happen again and again and again. Just unexpected. Poof. Change a course, flip a switch, and it is what it is. And I'm down. And so is everybody else. Everywhere. They're all down. Unless they had puts there. So we had this. This is with all that war stuff that happened back in August, if you all remember that. Everything gapped down real fast. Well, I had this written right here in case we went into this gap. Now we have a gap up here. I was looking at this over here. Didn't work out. We filled it. We actually went lower. And we could probably break out of that, in my opinion. Where we go next, I'm not really sure here. Let's take a look at the weekly. We are on anchored VWAP. We are on anchored VWAP. So, and we did fill this giant, look at this volume gap here to 129. Filled that. Now we're resting right there. Could we come down to this volume shelf over here to 119? I think we absolutely could. So by Friday, when we have quad witching, let's take a look at NVIDIA. See what we have. Ooh. 20-day moving average. Well, let's go ahead and remove that. We are on it. We are on it. Over here we have the what? We have the 50. Let's take a look at the daily. Daily says, look at us. We bounced right off anchored VWAP like it did here, here, and here, and here. Very good indicator, anchored VWAP. Sorry, guys. Let me go ahead and minimize this real quick here. So we bounced up, hit the 50 and pretty much the 20, then rejected again. 128 to 136. We were in NVIDIA calls. We called that this morning. Made some decent money on it. Didn't play out the way I wanted it to, but made some decent money on it. And now, where are we going to go? Probably anchored VWAP again. 126. We could probably see that. We got a volume shelf sticking out here. We could go into that little gap there, 124. It's not very deep, so you know we could easily see. We could see that again. That hold on here. There was something else I was going to look at. Let me. What else do we have? NVIDIA. Tesla, I wanted to talk about that. I called that out today. I did not like it. I did not like it. That candlestick formation, not good. Where could we go? I think we could go to the 20, 392. Do I think we're going to go there? Probably not. It's probably going to have a recovery because it already sucked up today, and it's probably going to keep going. It could. The lowest I see it going would be around 390, 395, somewhere around there. What else? Let's move on to crypto. What's up? What's going on? Yeah. Yeah. Let's look at the weekly. Let's look at the daily again. Let's take off the indicators. Sketchy. We need this thing to hold above that. I don't want to see this snapping, right? Bounce. Now it's a confirmed trend line after the third. I'd like to see this bounce up off this and recover and go up. If not, not good, guys. Not good at all. Like, really bad. Do we have any gaps? I swore I saw gaps over on TOS, but whatever. Let's go ahead and put the indicators back up. Yeah, we got a volume shelf there to 98, 97-ish. That would be horrible. Can you imagine? Can you imagine? That would be atrocious. It'd be awful. So let's see what happens here. Also, XRP, since everyone wants to see that. Flag broke, popped up, came down to the 20 EMA, and it's resting there. We got the 50-day right there at 170. That's my rundown of what's going on with this. I don't like that they threw that curveball. The thing is, guys, is if something isn't done quick, because debt's really freaking high right now, housing it's getting kind of sketchy because there isn't, before I move on, there's another one I wanted to look at, Intel. Okay. Housing's looking sketchy. Right, we're just about to teeter into the broken commercial real estate. That's all that's going on. That bleeding over into housing, because I really don't think anyone's going to be buying right now because rates are exploding. One bootleg way to track it is looking at triple T. This thing's popping all the way back up. You know, UUP, let's take a look at that. This isn't rates, but gosh, look at that run on that today. That is just crazy. The dollar has exploded. We don't want that. For housing, for Bitcoin, we don't want that at all. Look how low it was over here. And we've done nothing but tick up. So maybe it wasn't buying it. It wasn't believing that we were going to cut rates heavily, and it priced it in. And look at that. That is scary. So that can affect housing, car loans, everything. That's not good. If we don't get rates low like quick, there's going to be certain sectors that are going to start breaking and snapping, in my opinion. I'm not talking about stock market. I'm talking about outside of the stock market, which would then affect the stock market. So we'll see what the new government, what their plans are. Hopefully they have some good plans. They're going to want rates down. We're going to see how Orange Man handles Powell and how that dynamic is going to go, because it's going to be interesting. So let's see what happens there. I don't like that we have quad witching coming up on 12/20. I totally forgot about that. We're going to drill. It's kind of late to buy puts now unless we have a nice pop-up. And then we could possibly have a Santa rally, but I don't want us to, I don't want the Santa rally to look like this, right? Where's the gap at? Where am I? Where did this go? Oh, okay. I don't want it to look like this. I don't want it to look like us filling the gap, and then we have a Santa rally back up to here, and they're like, "Yay, Santa rally!" It's gonna be like, "Oh, I guess we had one, right?" Heavy support right here. I would not want us to come back here. This would be awful. But anyways, those are my thoughts. If you guys like this content, make sure to like and follow for more. Go to the Discord and join the newsletter. And we will see you in the Discord.